Hi, everyone. Welcome to our session. It's a second session of Talking Payments with Checkout.com. My name is Yael Barak. I'm VP of Product Management here at Checkout. I am delighted to be joined today by Mariano Diaz, who is Director of Banking and Infrastructure at TransferGo. Our session today is going to last around 30 minutes, but we would love to hear your comments, your thoughts, your questions as we go with the conversation. Feel free to enter them in the comment section. We'll take them as we go, or we'll also leave some time at the end to address questions that come up. So welcome again, everyone. And with that in mind, welcome, Mariano. If you don't mind, let's start by a little brief introduction to yourself and to TransferGo. Tell us a little bit about who you are and what your mission is.
Thank you. Hi, thank you, and many thanks to Checkout for the invitation. A pleasure to be here and speaking with you today. Well, a little bit from my background, I've been in the payments industry for 10 plus years, working for many years at Barclays, and then I moved to Revolut and then to TransferGo, where I'm running the banking and infrastructure team. That what basically means all the payments capabilities across this organization for helping people do the remittance globally. I run the aspect of running relationship with banks, other fintechs, card acquirers like Checkout, of course, and other players with whom we work for making sure we make that best for our customers. So a little bit about TransferGo. Well, the journey started many years ago, where TransferGo founders saw the opportunity to really follow the migratory populations across Eastern Europe, where there were hard worker people going to other countries to work and send money back home to their family. And that's where TransferGo positioned it very well as an organization, as a fintech, because we managed from that time to understand which were their needs, what do they need, what they were looking in terms of payments capabilities for sending money back home. And since then, we have had a very good engagement with that based on our good capability in our app and how we have gained very good traction for supporting that population. So we are a company 100% digital. We have offices in UK, Lithuania, Turkey, Germany, Ukraine, and we're expanding, growing, and making sure that our customers are every time more happier with a fast and payments at low cost. Yeah, that's summary.
Great. Maybe to start off, a question that's kind of bordering on a personal. You have a background in traditional banking, and now you have experience in fintech with Revolut and TransferGo. Where do you see the transition or the change, what we're experiencing right now between banking and fintech? How do they differ, and what do they bring, to market that is that's allowing us to progress maybe payouts or remittance as a service?
Yes, it has been an interesting journey to see how things around payments work from a banking perspective, like Barclays that works with many fintechs in UK and Europe, to see how fintech use services like banks or other providers. So what I've seen and I noted is a trend from the time I was working in the transactional business in Barclays. At that time there was a lot of transition between large players working with the high end, let's say, of large corporates helping around FX solutions, payments, to moving down the value chain, let's say, and supporting smaller companies, and how as well other fintechs working with SMEs and consumers looking to move up the ladder into supporting larger organizations. So this is where the transition was clear at that time, let's say 5 years ago, and recently, of course, all the new technologies related to all the capabilities around banking as a service, open banking, all these new tools, basically, that fintechs could use in the benefit. And in that space specifically, there's an increasing layer, let's call it, of B2B players, no, that not necessarily are banking as a service providers, are different type of fintechs, payment fintechs that are really embedding themselves very well between the two layers, the traditional banking space with the neobanks and remittance fintechs like TransferGo, for example. A big space now within the industry.
Thank you, and I apologize for some background noise here. Yeah, I find that fascinating how fintech actually solved problems that the traditional banking world was having a harder time moving, as fast as the rest of the market is moving. So with that in mind, TransferGo is in a very hot industry right now, very active. How do you guys think about the value that you bring to market? What is your differentiating factor, and how do you innovate?
Yeah, following from my initial comment that we have managed to understand very well the segment with whom we support, and because it's people that has migrated to work and send money back home, I think that the very specific area we've been very successful is on the customer support, understanding our users, anything that they need, any problem that they have, how we do support and how we take them by the hand to make sure that they're happy all the time. And our ratings in Trustpilot are super high because we have always prioritized the experience of our user, not only through the app, but also on the customers. And I think that's a very important point to note why TransferGo has been successful, because we have been across the country where we've been very working intensely in terms of our proposition, has been a great differentiator. Yep.
Yeah. And you said that you focus on migratory workers. Have you guys seen, it's impossible not to ask, any change in customer behavior with COVID?
Yes, well, certainly. So it's known that in worldwide the cash aspect, no, for remittances is huge, 80%, and because of COVID there has been a decline. But the digital side of remittances, and we have seen it from our point of view, has increased. Has been there's been a trend where people that were used to use cash for sending money back home, now they knew about the digital means, because nowadays most of this migratory population, they do have mobile, they understand what are these services, but now because they haven't been able to access those points where they could deposit the cash with other competitors, let's put it like that, they have started to migrate and understand that this is an easy way of working and sending money back home. Additionally, we have noted as well that there's a family that is in developed countries, let's put it like that, that because of COVID, they have been supporting other families back home, and therefore they have, because they are Jews and they usually have a very good knowledge of these digital means, they have engaged with us. So it's overall, we haven't seen a decline. Actually, we have seen an increase, and yeah, that's a positive trend. And of course, it's towards all the digitalization of the economy and how things are moving in the world. No?
Mm-hmm. Yeah, well, one thing that I find fascinating and I like to think about as a product manager is obviously the needs of my customer. And I find that there's a lot of technologies not related to payment that have changed the way we experience life. And mobile obviously is one of them. It makes everything very accessible, very immediate. And when it comes to payments, I think maybe in the past we used to think about how our money moves between, let's say, institutions like bank accounts and other types of financial institutions, whereas today we're more thinking about what is my experience of getting money. I just want my funds, or I want to send funds to someone, and it's more around the value of how quickly can I get the funds there, how much is it going to cost me, how much certainty do I have that the funds are actually going to land. So it's pushing, I think, the whole industry to make the channels of moving money almost irrelevant. It's not about what channel, it's about how you create a customer experience with those channels. So I'm wondering what your opinion of obviously the statement is, but how do you think about these things?
Yes, certainly, and it's a trend and a factor that, as we're talking about consumers, of course, remittances
Mhm.
is across the whole value chain because corporates at the end they want to make a payment from A to B cross border internationally, and they want to have the best price, the best reliability, and the payment really to arrive on time, and the same with the consumer. But of course, my take on that is that certainly they just want fast a reliable and safe at a right cost pricing point FX slash service proposition where they could trust and basically make the remittance payments every month, because at the end we are seeing our customers not using us on a daily basis obviously, but they engage to us let's say 2, 3, 4, 5 times a month, and this is when those things do matter. So again, coming back to your point, yes, what they care is the payment to arrive on time, fast, and the right price. And where we have been very strong is to give them that, to give them the right pricing points and the speed through our network of partners that I will just comment a little bit further later. But yes, that's the strength that we have, and they valorate that a lot, and that's why they continue coming back to us.
Yeah. Yes, let's talk a little bit about the operational complexity and what goes into the planning of building such a network for TransferGo. You know, you're the ones who are enabling all those channels of money movement and remittance. What are the areas that you're thinking about as you're evaluating how to build that network?
We became successful because initially, when we started a few years ago, we built a very strong partner network across different countries where we had no, the large base of our customers. And basically, what that created was a network where we could rely very well into making sure we use the model of local in, local out. This is how we call it. That basically someone in UK sends funds to TransferGo, then we have our banking partner in Poland, for example, and we do the payment on the last leg in that way, no, by sending one batch of funds to Poland, and then we do the last leg of the payout. So that was the initial model that we started working, and that went very well because we managed to achieve those successful partnerships at the right time, at the right point in time when there were not many fintechs doing this type of model. And then we successfully escalated that logic to other different business or ways on how we could complete payments. For example, providers, international providers that have access to more exotic countries, regions where we could rely on them to send payments to them. Additionally, a provider that could provide good, give us good FX opportunity for different currencies, and we could use it. And recently, of course, working with Checkout, we have been very successful in achieving what is Visa Direct and Mastercard Send, and achieve that push to card payments. And at the end, coming back to the user experience and customer, what they want is to send a payment as fastest as possible in the most convenient and cheap way. And at the end, that's the choice, and that's the choice that we provide. And how the world is evolving, where we could continue seeing more choice coming down the line through innovation, and this is in benefit of our users. So my role and what TransferGo, of course, does is identifying those opportunities, those choices you could give to your customers, and then exploit them and build partnerships and go for them, no?
Absolutely. And I think, you know, you mentioned the Visa Direct and Mastercard Send products that we're working with you on. I find it fascinating how now, you know, with these products, the networks, Visa, Mastercard, are pushing the financial institutions to become better. I think without these products, the speed of adoption for real-time payments, let's say in SIPA or the US, doesn't isn't as urgent, because really what these networks did was create a parallel track and tell consumers, you can move money through us, we're just as global, we're actually real time, more accessible than traditional banking. And most people in first world, you know, will hold that plastic or that account that you can push a card to. So I am wonder what you're wondering about, who else is going to push the industry to be better? Like what other innovation opportunities are out there for maybe infrastructure creation or different schemes, different networks? What do you think?
That's an interesting point, and one that I'm always thinking, what is coming, what's going to be the innovation. And if you see it from the angle on what has happened in recent years, is a particular case because networks, let's call it, or payment infrastructure or rails around the world. For example, SWIFT, they were seated in the SWIFT network of correspondent banking for many years, and they created SWIFT GPI to basically accelerate the speed of payments through different service levels and opportunities and different models as SWIFT GPI is evolving. And that has brought innovation to the industry of cross-border payments. But they were already in the SWIFT already was seated in that network, and all the banks in the world were already used to that network. Interestingly enough, Visa and Mastercard had this acquiring card processing network across the world for many years. And what they did, they flipped the logic and they started sending payment that this is what we are working with you, we check out. And this is the network being leveraged in a use of a different way.
Mm-hmm.
And this is where the innovation has come recently. So then if you follow the same line of thought, what else could happen? For example, comes to my mind things like different faster payments alike in UK, an automated clearinghouse for instant payments. They could become more evolved around the world and potentially to be connected across different countries. That could be a new way of innovation where how this payment system could interact between each other, and then the movement would be even more attractive for benefit of the user. Additional example is the mobile carriers around the world. For example, M-Pesa in Africa, this example is very well known, that they've been used to they are used to the wallet and the network they have locally. What if international mobile carriers start thinking and working around cross-border payments and using and leveraging their infrastructure, their network, their knowledge to bring that benefit? Finally, of course, is a blockchain, and for me, at that point in time where central banks will back up the blockchain evolution, I think that will bring the break into what is payments. But that's another rail, that's another infrastructure, that's another capability that could as well compete. So overall, what I see coming in next years is ecosystem of payment capabilities across different networks, let's call it like that, that they're going to be competing between each other. There will be successful, there will be some winners, some losers, but at the end, it's going to be these layers of infrastructure around the world, and it's going to be about the players, the B2B players, let's call it out, like Checkout, for example, that are going to position themselves very cleverly to have very good expertise in one, two, three, or more of those layers of payment infrastructure. And once that they position themselves in the best way, will have the very high chance to win the race. This always, that I always like to comment is, let's say, cut by the regulatory and licensing aspect, because
Yeah.
as much as you could do to have a connection to these networks, always you will need that local regulatory aspect if you want to give end-to-end experience, no, for your customers. In this case, could be neobanks, fintechs, and payments players like TransferGo.
Yeah. Thank you. By the way, if you guys on the call, if you have any questions or comments, please feel free to put them in that comment section and we'll address them. Um, Maybe something to talk about that's sort of related to you alluded to with the licensing comment to value that companies like maybe Checkout or other financial institutions can bring, which is obfuscating from the complexity of operating these types of services. I think another interesting area is data, data availability, data relating to the transaction and how when transactions are processed between network, the accuracy of the data of the transaction might sometimes actually be the make or break of whether or not a transaction can process or if it's returned or rejected. How important is data to you guys, and do you actually use data maybe even as a differentiating factor?
Well, as a remittance and a pure fintech player, data is everything. Is below everything that we do in TransferGo, and Putting as an example, in this year we have processed £3 billion of value transaction across 10 million transactions being sent, and 2.5 million customers that we currently have. So that is a huge amount of data we've been sitting, and we are seated and we use it. And this is how has made us be very close to what I was referring initially to our customer segments, and how we follow them. So that has been a very good basis on how we understand our user base. But of course, additionally, providers like Checkout and all this push to card opportunity that we're working together is additional data. It's additionally points where we could connect dots and understand which markets could be more interesting. And we have experience in firsthand in the recent months on the back of the implementation of push to card via Checkout, a few countries that through your solution we didn't have, let's say, an easy way to reach those corridors, and through push to card we've been able to test very easily with some small tactics, and that has come out as new data that have proven our hypothesis right or wrong, and then we pivot or interact and develop the market if we see convenience. So yes, it's additional data that we are always thirsty to absorb from providers like you, like Checkout.
Thank you. I think this partly actually goes to one of the questions that I'm seeing come up in the comment section of how to go around correspondent banks to ensure speed and transparency. So obviously one way is to go to a different scheme altogether, which is the networks. But how do you think about ensuring optimized maybe routing of transaction to avoid the lag or the drop off of corresponding banks?
So, well, there's always there's not only one solution for the cross-border remittance international payments. There are different needs depending the type of user, the type of transaction. So the correspondent banking network, the SWIFT network, is valid in many ways. Nowadays, that is having SWIFT GPI becomes even more relevant. That pricing point always has been an issue because it's very well known, and that's why a proposition as TransferGo has succeeded so much, because we have managed to create this network directly. So we cut, let's say, the banking system that historically has been in the middle, but still for us is valuable, and therefore coming back to the question, the routing aspect, yes, we have other ways, but it's not exclusively these other ways as well. The traditional ways could be an option if they support in those specific moments that we need those services, no?
Yeah, I would say it's always a balance between speed to market and optimizing, right? And you want to go to market quickly, you choose the fastest, most available route. And once you prove out that you have a case for that market, you start optimizing and you set yourself up for the best experience.
Indeed.
Yeah. See, we have a couple of blockchain and digital currency fans here in the comment section. The first one is asking how much of the remittance business is going through the Ripple network today, which I actually don't know. I don't know that anyone knows.
Well, we have a relationship with Ripple, and we value it, and we've been working with them, and they've been very great in helping us understand exotic corridors where we are not so close, and through that network and the partners that they work with as well, it's a good way of interacting and potentially achieving, and we have done in few cases to obtain the right partner to work into those corridors. So yeah, it's a valid model. It's additionally to the model that I have discussed, no, and this would be related to the blockchain aspect, no, and how that will evolve in the future. So yes, it's something that we currently as well have under the basket, let's say, of partners and different type of way on how we process payments.
Yeah, and that goes straight into the next question. I'm going to read it out as is. It's quite lengthy. What about a decentralized peer-to-peer payment network, which is based on blockchain technology? The person asking the question firmly believes that there won't be a need for legacy legislation or regulation, and that it would speed up transfers and the reliability of the transfer. I think that the main question is, what are your views on such a future implementation?
I think legislation is going to be important for the whole journey on basically how blockchain is going to prove its value for remittance payment, because this is what we're discussing today, and that's not something that is as a core, no, like the core concept of what blockchain is and how could be implemented for payments in terms of not only of the movement of the information and data, but also on the value movement. And it's on the value movement where is the challenges always have come, and that's why blockchain and distributed ledger still is working to create a solution. And that's why I was referring central banks, from my personal point of view, could solve that. And when that happens, added to the right legislation and regulation, that could become the detonator for basically blockchain to be successful. And as a consequence, if that's the right way or usage, TransferGo will as well absorb those opportunities and use them at that point in time if we feel it's right.
Mm-hmm. Yeah, I agree. Question here. What's the split between push to card versus push to bank account? Which corridors do you see push to card as key in?
Well, we are having a mix of corridors where we historically had presence, and we have added a push-to-card capability, and therefore things have improved. And on the other hand, corridors where we didn't have any presence and the push-to-card has opened. So it's a mix of results and positive on both sides. Our growth rates has been above the expectation, let's put it like that, and very positive. And that's something that gives us a lot of hope that the network that Visa and Mastercard are creating is quite positive. There's still some aspect that the network is solving on push to card to make sure that the penetration is there. But I'm certain that it's going to be there in a couple of years' time, and it's going to be a strong way of how a remittance fintech like TransferGo will do things.
Yeah, I think also with the rise of some neobanks and how they connect, the cards that they issue to the accounts that they issue to their users, we're going to see probably even more push to card because there's an immediate linkage between that thing that we think about as a bank account or something, a wallet account, and the card, and almost the traditional checking account is kind of, it's the value proposition isn't there anymore. It doesn't matter who holds my balance, if it's called a wallet or if it's called a bank account. It's just my balance, and it needs to be accessible to me in real time.
It's true. It's true.
Yeah.
That's what has been created. Additional concept, as reference, interesting to see in push to card how different regions and users in different regions behave toward the concept of sharing their 16-digit card number for initiating the payment via push to card, because there are regions that are more used to it and have thrived in the adaptation. So other regions are taking a little bit longer, but yes, it's a combination of factors. From the user perspective, how do they understand that service? And from the provider perspective, how do they create penetration? In this case, Visa and Mastercard. No?
I'm sorry, I lost my connection for a moment. Yes, thank you for that. I think we're almost out of time, so I'll just ask you one final question. What's next for TransferGo?
Thank you for asking that. Well, we are continue deepening and strengthening our relationship with our partner network, with our customers, building in our existing market more capabilities in Turkey, Ukraine, Eastern Europe, and of course the payout network globally for 153 countries that push to card has helped a lot on that aspect. Is continue growing and increasing and becoming stronger. Additionally to that, we are working as well on becoming for our customers a payment platform where they can not only use us for sending payments back home, but also for storing value, transacting or sending money between users of TransferGo, and additionally use a card for using and store the value that they store in TransferGo. So this is a journey that we have started to explore, and we want to become embedded into their day-to-day life, because remember, as I commented, is the remittance population. They do trust us. They do rely on the services we provide them, and on the back of that trust, that customer service we give them, they are very used to work with us, and for them to move into the next layer is not something very difficult or different. So this is the opportunity we are going for.
Thank you very much. And right on time. Thank you, Mariano, for joining us today. It's been a great conversation. Thank you, everyone who logged in and were with us. And thank you for your questions as well. If anyone has any remaining questions, please feel free to connect with us on LinkedIn, either of us, and we'll address them as we can. Thank you so much again, and we'll see you next time on Talking Payments from Checkout.
Thank you, Yael.
Thank you.
Bye bye.